Welcome to the video. If you are new here, please don't forget to like and subscribe to this channel. Let's dive into it. Investing in dividends is like rolling a snowball down a hill. At first, it may seem small and insignificant, but as it gains momentum, it becomes larger and more powerful. The snowball effect of investing in dividends can be a powerful tool for building wealth and achieving financial freedom. In this essay, I will explore the power of investing in dividends and why it is like a snowball. Dividends are a distribution of a company's profits to its shareholders. When a company makes a profit, it can choose to reinvest that money into the business or distribute it to its shareholders in the form of dividends. Dividends are typically paid out quarterly or annually, and they can be a reliable source of income for investors. The power of investing in dividends lies in the compounding effect. When you reinvest your dividends, you are buying more shares of the company, which in turn generates more dividends. This cycle repeats itself, and over time, your investment can grow exponentially. To illustrate the power of compounding, let's consider an example. Suppose you invest $10,000 in a company that pays a 3% dividend yield. In the first year, you would earn $300 in dividends. If you reinvested those dividends, you would own an additional $300 worth of shares, which would generate $9 in dividends in the second year. If you continued to reinvest your dividends, your investment would grow to $14,873 after 10 years, assuming a 7% annual return. The snowball effect of investing in dividends can be seen in this example. At first, your investment may seem small, but as you reinvest your dividends, it becomes larger and more powerful. This effect can be amplified over time, leading to significant wealth creation. One of the key benefits of investing in dividends is that it can provide a reliable source of income. Dividends are typically paid out quarterly or annually, and they can be a dependable source of cash flow. This can be particularly important for retirees or those who are living off of their investments. In addition to providing a source of income, investing in dividends can also help to mitigate risk. Companies that pay dividends tend to be more stable and mature than those that do not. They have a proven track record of generating profits and returning value to shareholders. This can provide a level of safety and security for investors. Here is a real-life story which comes from the world of baseball. In 1919, Babe Ruth signed a contract with the New York Yankees that paid him $10,000 per year. At the time, this was an enormous sum of money, and it made Ruth one of the highest-paid athletes in the world. However, Ruth was a shrewd investor, and he understood the power of compounding. Instead of spending his entire salary, he invested a portion of it in the stock market. One of the stocks he invested in was a chewing gum company called Wrigley's. Ruth believed in the company's product and its growth potential, so he bought shares in the company and held onto them. Over time, Wrigley's stock grew in value, and the company began paying dividends. Ruth reinvested his dividends and continued to hold onto his shares. By the time he retired from baseball in 1935, his investment in Wrigley's had grown to be worth over $250,000. This was a tremendous sum of money at the time, and it provided Ruth with financial security for the rest of his life. Another story comes from the world of fast food. In the 1960s, a young investor named Warren Buffett began buying shares in a fast food chain called McDonald's. At the time, McDonald's was a relatively new company, but Buffett believed in its business model and its growth potential. He bought shares in the company and held onto them for many years. As McDonald's grew in size and popularity, the company began paying dividends. Buffett reinvested his dividends and continued to hold onto his shares. Over time, his investment in McDonald's grew to be worth billions of dollars. What's interesting is that Buffett never actually ate at McDonald's. He famously quipped that he was one-quarter Coca-Cola because he drank so much of the company's signature soda, but he never developed a taste for fast food. Despite this, he recognized the power of investing in dividends and the potential for growth that McDonald's represented. These anecdotes illustrate the power of investing in dividends and the snowball effect that it can have on your wealth. By reinvesting your dividends and holding onto your shares, you can generate significant returns over time. Of course, investing in dividends is not without its risks. Companies can cut or suspend their dividends if they experience financial difficulties, and the stock market can be unpredictable. However, by diversifying your investments and selecting stable, mature companies with a proven track record of paying dividends, you can mitigate some of these risks. In conclusion, investing in dividends is like a snowball rolling down a hill. At first, your investment may seem small and insignificant, but as you reinvest your dividends, it becomes larger and more powerful. The compounding effect of reinvesting dividends can lead to significant wealth creation over time. Investing in dividends can also provide a reliable source of income and help to mitigate risk. By selecting stable, mature companies with a proven track record of paying dividends, you can generate steady cash flow and build a more secure financial future. So, if you're looking for a way to build wealth and achieve financial freedom, consider investing in dividends. You never know, it could be the beginning of a snowball effect that leads to a lifetime of financial success. And who knows? Maybe one day you'll have a funny anecdote of your own to share about the power of investing in dividends. You will find some links to begin investing successfully into dividend-paying stocks in the description. Don't forget to like and subscribe to this channel for more helpful content about finances. What do you think about dividends? Let us know in the comments.